Hey everyone, welcome back. My name is Adam. I have Victor.
Hi everyone.
And today I have a very special guest. His name is Ong Xinjiang from LionGlobal Investors. He is the head of ETFs. Welcome.
Hello everyone.
All right, so we wanted to have Xinjiang here today because I think a few videos back, you were asking that if you guys are
interested in gold.
Because I think gold hit the headlines recently, went to all-time highs. There's a lot of things going on in the world right now, and some people may see gold as a safe haven. So we actually have Xinjiang here from LionGlobal. You're the head of ETFs, and we have you here today because you have a very interesting gold ETF that we want to talk about that links to gold. So before we jump into all of that and gold and our visit to the gold vault, we'll talk about that really soon. What can you tell us more about yourself and what you do at LionGlobal Investors?
Hi, I'm Xinjiang, LionGlobal Investors. I head the ETF business here. So in terms of what I do, I develop ETF product ideas and then after that list them on the SGX and all other exchanges. After listing the ETFs, I actually distribute them and also increase awareness of our ETFs to the investors and also to our audience. So this is what I do, and probably I'm the guy in Singapore who probably has listed the most number of ETFs here. So right now in LionGlobal Investors, we have 10 ETFs. We are the ETF issuer with the highest number of ETFs on the SGX, and I personally have listed 8 of them.
Yeah, that's really impressive because when I first met you, you introduced yourself as the head of ETFs, and I didn't know your basically your body of work. It's like, wow, so many ETFs. And I think the one that stood out for me was like many years ago was the LionGlobal
S-REIT, right?
The S-REIT ETF. I think that was a really, really good ETF. And you and your team were the ones behind that. So today we're going to talk about the gold ETF that you guys have. But before we get into the gold ETF, we want to talk about gold per se. And the reason why we have you here today is because SGX invited Victor and I to the gold vault visit. So it's a literal gold vault. It's somewhere in Changi. I'm not going to tell you where it is. But it's basically a building with hardly any windows, almost like a data center. Right? Then you go in, like there's a gate for the car before there's one gate there, and then before there's another gate, and then you get into the building. So two layers of security, and then some more layers of security before we actually get to see all the stuff that we saw. So we were invited, and then you were there to tell us more about the gold and how basically this vault. They took us a tour around the vault and everything. It was a pretty interesting visit. Right?
Yeah, I think you can get lost inside the vault.
Don't get lost.
Everywhere looks the same.
It's quite confusing. So it was like almost like Ocean's 11.
Yes, exactly.
But there's no way we could. Looking at the layers of security, there's no way that we could actually get away with anything.
Actually, at first when I first went there, I thought it was a bit like Squid Game also. All the doors look the same. That's quite amazing. All the doors look the same.
I like the way you think.
Yes.
Squid Game.
Now you think of it really looks like Squid Game.
So just a bit more about that. So we went in and basically they were showing us how physical gold is secured within that compound. So there's layers of security. I think there were 2 steel doors that weighed about 3 tons, very heavy. The guy invited someone to push it. I didn't volunteer to push it, but it looked really, really heavy. And then like everywhere you go, you needed like to beep. At least 2 people to like beep through something.
And you need to make a phone call to get some special code to open the...
It was like, there's no way anyone's going to get in and out like GTA style and get away with anything there. So we're going to talk, that's how we met you. And then the video recently you said is, are you guys interested in gold because of what's happening around the world? And gold prices are going up and there's a lot of uncertainty in certain areas like maybe the USD and all that stuff. We're going to cover that. And that's why you're here. So thank you for joining us.
Thank you.
So why don't we head straight into gold? Why is it that recently gold has hit such all-time highs basically?
So in terms of why gold has hit all-time high so far, what we observe mainly are 3 key factors and 3 key drivers. First, what we have seen is that central banks have been accumulating gold massively, especially from data from what we see on the World Gold Council. As the 2 key countries, actually in terms of percentage, that have seen significant increase in gold within their reserves are actually Turkey and Poland. So in fact, Poland actually more than doubled the amount of gold within their reserves by percentage in the past 5 years, from 2020 to 2025. And we are seeing a lot of all these central banks institutions being more net buyers of gold in the upcoming months, and especially already in the past few months because of the ongoing US-Iran war. And as more geopolitical uncertainty unfold, we believe that the broader trend of de-dollarization will intensify. So fun fact, right? So for the past 25 years, from what we see and what we notice, gold actually has been at a lower percentage of global reserves compared to US dollar. But this has changed for the first time in 25 years, since year 2000, that in August 2025, gold actually outweighed the US dollar as a part and percentage of global reserves. And since then, we have noticed the percentage of reserves having gold going up and up. Like what you hear in the song Golden, up, and up. And we believe this, as this trend unfolds and as more geopolitical risks unfold, gold will be an incredible geopolitical hedge for a lot of investors to consider and allocating a part to the portfolio. And third part about this is also gold being a long-term store of value. Gold has existed for more than 5,000 years. Last year, the record high of demand for gold reached more than 5,000 tons. And we expect this to also further continue due to de-dollarization as more central banks become net buyers of gold. Is further expected to continue. And there are a few key fundamental reasons why this is happening. Because gold has finite supply. It cannot be printed. It's not like paper currencies where central banks can keep printing money. Gold has finite supply. And because of this, it has preserved purchasing power, preserved wealth for the past 5,000 years. And especially since what we noticed since the global financial crisis, gold has appreciated significantly against US dollar and even other currencies, including our very own Sing dollar. Because paper currencies can be printed, but gold cannot be printed. So this is the key thing. We hope viewers and also investors take note about gold and also its long-term structural growth drivers.
All right. So I think usually when people see high prices, things going up and everything, they get very excited. But how would you view gold as an instrument yourself?
I think the most important thing is when we look at investing, right?
Yeah.
Gold, they don't generate cash flow. I think we all know that, right?
Mhm.
So usually when someone asks me if I want to invest in gold, how should I do it? I say you should look at gold as a hedge against the US currency, right? If you worry that the world will go into a turmoil or chaos or everything, right? Then gold is a good hedge for all this situation, right? Usually I tell people to keep 10% or less, right? Not more than that, right? Just for the hedging purpose, right? You're not looking for investment, but you're looking for hedging, right? It's just like an insurance, right?
So I think that's one way to put it is like insurance.
Insurance, yes.
It's gold as an asset class is uncorrelated or less correlated with like stocks and bonds. It's kind of like an asset in itself. Is that true?
Yeah, I think in terms of correlation, gold has extremely low correlation compared to equities and also bonds. In fact, fun fact, for the past 25 years, we have seen 10 equity market downturns that have occurred in the past 25 years. And gold actually delivered a positive return in 9 out of these 10 equity market downturns. And when we did a further study, just based on a global portfolio basis, for a portfolio that has 50% global equities, 50% US bonds, if you just make a 10% allocation towards gold, it actually helps to lower volatility, but also increase returns. So this means higher risk-adjusted returns and achieve greater diversification benefits. And we notice this exact same trend happening in a Singapore portfolio. 50% Sing equities and 50% Sing bonds. If you just make a 10% allocation towards gold, same occurrence happens where there's higher risk-adjusted returns. So all these actually reinforce the status of gold as a safe haven asset and also as a portfolio insurance, where it helps to achieve diversification benefits for a lot of viewers and also for a lot of investors.
Okay. So if someone's looking at gold, how would someone value gold? Because gold, I mean, it kind of just sits there. I mean, let's say, for example, if I give, the way we value a stock is based on its earnings, because it produces earnings, you can kind of put a multiple to that. Same thing with property. There's the rent that you earn, then you can put a multiple to that. That's the value of a property. In some way, you can value it that way. But gold just kind of just sits there. The lump of gold today is the same as the lump of gold 10 years from now. So how would someone value gold? I mean, beyond the price chart, because the price chart doesn't really tell you the value of something, it's just the price. So how would you actually value gold?
Okay, fundamentally what we notice is that gold is valued and priced in US dollars. So whenever the US dollar depreciates, or actually when there's more money printing, means the value actually slowly depreciates or gets devalued, gold prices in US dollar actually will move up. So this is where actually gold comes in, because it is a hedge against currency devaluation. And also second thing, in terms of what we noticed as interesting about gold, it's existed for more than 5,000 years. So you have went through numerous wars, numerous periods of inflation throughout different empires, but it's still intact. It's been there for more than 5,000 years. And third thing also, from what we noticed is that other than being an inflation hedge, currency hedge, it is also a crisis hedge. So being a crisis hedge is important. It has survived so many centuries for more than 5,000 years, and we believe its long-term status and also long history as a store of value, all these will further continue to be able to help gold reinforce its status as a safe haven for a lot of investors to consider.
Yep. So I think congratulations. Today you just launched your LionGlobal Gold ETF.
Yes.
Okay, maybe you can give the viewers a view, right? What's the difference between buying a gold ETF and also just buying the physical gold itself? Right? Is there any difference indeed? Yeah.
I think in terms of buying physical gold, there are a few things to consider. First is in terms of storage, second is vaulting, and third is in terms of insurance. So traditionally, if a person goes to buy gold, there are a few types of gold they can consider. One is jewelry. So for example, like 四点金 and all these. If you buy jewelry, there's a lot of retail markups and also craftsmanship costs involved. So and all these actually stack up and add up to different costs. And the purity might not be investment grade, because it might not be possible to get 99.5 minimum finance. The other way that can be considered would be in terms of buying the physical gold bars or physical bullion itself. But this means also you have to go and queue either at a bank or at a bullion dealer. And when there's queue at the bank or bullion dealer, you waste your precious time. And also, other than that, you might not be able to even get your ideal gold bar size. So these are the things to consider. And this is also where a gold ETF comes in, to make it simple for investors to access gold efficiently and conveniently, because you do not have to worry about storage, about vaulting, and also the last thing in terms of bid-ask spread. So for example, right, I actually bought a gold bar here. It's 2.5 grams. I paid 14% bid-ask spread for this gold bar.
How much is it in dollar value? How much was that?
So assuming, because I bought it quite long ago,
oh, okay,
I forgot
so you got
about
a good price
the value. but it was a good price.
Okay.
So assuming the true value of this gold bar is $1, I actually paid $1.40.
Okay, because of the spread that you
actually I paid $1.14 for this small gold bar. And all these could have been avoided if I just actually bought my own ETF, which is our LionGlobal Singapore Physical Gold ETF. Because the management fee to total expense ratio is capped at 0.39%. So to put into perspective what 0.39% means, right? So for example, if you invested $1,000, 0.39% actually means $3.90. And it's spread out across every single calendar day. So this means roughly 1 cent per calendar day. So to be able to gain exposure to this at 1 cent per calendar day is actually quite simple. And also at the same time, you do not have to worry about storage, vaulting, and insurance. So these are the key aspects to consider between buying a gold ETF or buying pure physical gold.
All right, I want to jump in right here because just now you mentioned queue up, buy a gold bar. I think most people have no idea how heavy gold is.
Yeah.
So if you literally like, man, I have like $10 million, I'm going to buy gold bars. It's actually heavy.
Yeah. I think to give a rough figure, I think 12.5 kg is around 2 million.
Yes. So we went to the Gold Vault.
Yeah.
Victor and I were there with a bunch of other people as well. And it basically, like I said, layers of security, steel doors, beep here, beep there. Finally, you get to a room. It's like basically like, you know, it looks like a regular room. There's nothing fancy. There's no like laser lights or anything like that. So we didn't have to like do a Mission Impossible. So we just walked right in. But there were crates where all the gold was stored. And it wasn't exposed. So you would think like, oh, maybe it's like just gold sitting there, shiny and yellow. It's all in crates. Each gold bar is actually in its own box as well, right? Because this is what, LBMA standard or something like that.
Yeah, they follow LBMA standard, minimum 99.5%.
Yeah, so we talk a bit about that, about why that is important when it comes to a gold ETF. But basically, all that gold was there, and then they had 2 gold bars sitting outside, like we could see
Yep.
the actual gold, and we took turns to carry it.
Yeah.
It
We
was
took turn to do bicycle.
yeah, it's okay because I go to the gym.
Yeah.
It's not that heavy lah,
Yeah.
but actually it's very heavy
Yeah.
because you pick it up, that bar itself is like 12.5 kilos. And for someone who doesn't I mean, we're not used to that sort of density in our physical world. So gold is a dense metal. You pick it up, this is 12.5 kilos, and that bar is worth $2 million. Yeah. Anyway, so I was holding $2 million in my hand, really, really heavy. And then the guy was saying that, okay, so we have one crate here of gold bars. That crate alone
It's 1 ton. That's
is
170
million. And
Yeah.
then it was like 1 crate, 2 crates, 3 crates, 4 crates. So like that room was like a lot of value inside basically. It was just like, wow, this is
Mind-blowing.
It's like,
Yeah.
I mean, it's just you're surrounded by money basically, in a sense. All right, so back to the point about queuing for gold.
I won't want to
it's heavy.
I don't want to have that 12.5 kg at home.
Yeah, you're gonna
Yeah.
put it like, if you like put a gold bar, like, those are movies where we're gonna like rob the gold vault
Yeah.
and then like put all the gold bars and like carry that out. Unless you're like Superman, right? There's no way you're gonna do that.
Yep.
Yeah, so that was like my experience of gold. But you wanted to point out that that's the thing that you have to do if you want to actually buy physical gold and
Yeah.
put it in your home and actually look at it. It's not
Yeah.
very convenient, right?
Yeah, it's not very convenient, and you have to worry about storage and insurance, especially if you have such high value items at home. You probably want to invest more into security and also insurance.
Yeah, I wouldn't be able to sleep at night. Let's say I bought a gold bar, the standard one, $2 million USD, put it in my house. I just can't
You
sleep.
must lock it in a very safe
I just don't know where to put it.
Yeah.
I just don't feel safe with that.
Yeah. Yeah.
So that's why the vault comes
Yeah.
into play and everything.
Yeah, I think the reason why we went to the vault, I think, is because I think LionGlobal want to prove to us that they own the ETF is backed by gold.
Physical gold.
Yeah, physical gold, right? And they want to show us that they really own the gold.
Mhm.
Okay, so that's why we are at the gold vault looking at the gold, right? I mean, it's my first time at the gold vault, and it was very interesting.
Yeah, I think that's the point I want to make. This ETF is a physical ETF.
Yep.
Tell us a bit more about that and the difference between that and let's say a synthetic ETF.
So there are a lot of differences between physical gold ETFs and also synthetic ETFs. Synthetic ETFs, they are mainly using gold derivatives, for example, like gold futures and all these. So sometimes, even though the synthetic gold ETF might have slightly lower management fees, there's higher counterparty risk. So imagine if the gold futures issuer goes bust or collapses, the investment principle of the investor could be lost. But for a physical gold ETF, it is backed by real physical gold, and it must be investment grade, meaning we mean international standards like minimum fineness of 99.5%. And with respect to this, each of the gold bars also need to be uniquely identifiable. It's like our NRIC, you have your specific uniquely identifiable code number on the specific bar together with the refiner name and all these. So all these have to be there to ensure all of these bars can be segregated and also properly identified. And this is where a physical gold ETF comes in to be able to provide greater assurance to investors. And the next thing I think a lot of investors might miss is also, in terms of the gold, it's good that you already get portfolio insurance in terms of getting a gold or gold ETF. But next thing that matters is also where you vault the gold. So there have been countries, for example, in the past that have actually confiscated gold before, for example, like US and UK. And that is where actually a lot of the gold funds, existing gold funds actually vault their gold in US and UK, because there's a lot of infrastructure already there and it's established. It's also faster and easier to launch gold funds with established infrastructure. But we actually chose the slightly harder way. We choose to vault all our gold within Singapore. So we have to establish all the different workflows and processes to ensure this can be feasibly done. But as a result, by vaulting all the gold in Singapore, it's a geopolitically neutral jurisdiction, AAA credit rated. Singapore is also well known for being stable as a jurisdiction with high security. And this is where actually it matters, because when you have insurance, you also need to ensure that the insurance within your portfolio is able to be properly exercised when you need it. And to add this extra layer of assurance for investors, we also fully insure our gold against loss, damage, and theft while in custody and transit. So I think the part about in transit might be confusing to some investors or even some listeners. So for example, when our gold reaches Changi Airport and it needs to travel to the vault, there will be an armored vehicle to escort this amount of gold to the vault. And this means it's in transit. And if there's a case of loss, damage, and theft during this period of transit, the insurance actually will cover these events. So this way, actually having full insurance coverage is important to add this extra layer of assurance for investors who are looking to add gold within your portfolio.
So all this is to protect the value of the gold in your system, basically, so that your ETF is basically backed by all this physical gold, is insured, is protected. And you mentioned that insured gold also means that the gold has to be of a LBMA standard.
Yes.
What's LBMA stand for again?
LBMA stands for London Bullion Market Association.
So it's like a standardized way of
global benchmark
of I guess casting the gold. Yes. So like every single gold bar is basically unique.
Yes.
There's a number. So like for example, like you have these stories where they steal gold and they melt it down and they sell it off on the market. But when you do that, you don't actually get the real full value of gold, right? There's a discount to that.
Yes.
But because this is like serialized gold, this is the actual full price of the gold that you have, and all of that is happening in your vault basically.
Yes.
So even like during transit and all that, it's all insured.
Yep. So I think the most interesting thing about this LionGlobal ETF that when I went for your presentation that I noticed is because before this LionGlobal ETF, right, the only I think gold ETF that most people or most Singaporeans will see is the GLD, which is the SPDR gold ETF, right? And the thing that really caught my attention is the confiscate, right?
Oh, okay, like confiscation, like the US.
Yeah, US and UK have a history of confiscating the gold, right? And the SPDR gold ETF are all vaulted in US, UK, and Switzerland.
Okay.
Right. Whereas this is the only ETF, right, that vaulted Singapore ETF that vaulted in Singapore, right, which is neutral. I mean, in the event where if Singapore really get confiscated, then there's a big.
It's highly unlikely, right?
Yeah, it's highly unlikely, but that is going to be a big hoo-ha.
Yeah.
Right. I think that is the best selling point. And plus, the other gold ETF, they never really specified whether they are fully insured or not.
Okay.
But I think you guys always consistently saying that it's fully insured by insurance, right? So basically your goal is safe, right?
That's the point. I think I think that's the point that what I like about this, and I'm not trying to glaze your fun here, and I mean anyone can have reasons for owning gold or not to, but what I really like about this is that it's actually vaulted in Singapore. Who's going to rob the gold in Singapore? Do you have like in the US maybe they have some crazy gang with guns and everything and they could like storm the vault? I mean, it's not going to happen, but in Singapore it's like
our security is tight.
We're too busy. We're too busy working hard. No one has time to do that stuff. It's very secure. Like it's basically a very safe place, Singapore, right? Like you said, it's geopolitically neutral. No natural disasters. It's not a hot spot in any way. Like sometimes the US and the UK could be, because there's so many things happening in the world. That's one of the things I really like about it. If I actually wanted a physical gold ETF, if I have a preference between Singapore and the US, I think Singapore would be my pick.
But another interesting thing that I asked him is, so in the event where, let's say, Singapore go into the mess, I want to use the ETF, can I redeem the gold?
Okay.
He said can, 25 kg.
So you can redeem the gold.
Yeah. That's about.
Tell us more about that process.
How much about it?
Briefly. How does that work?
Yeah.
So actually, in terms of exchanging the fund units or ETF units into gold, it is possible. Minimum 25 kg. And we term it as ad hoc in-kind redemption. So 25 kg is roughly like 2 400-ounce bars, because one 400-ounce bar is roughly 12.4 kg. But the thing to also take note is that the vault can only deliver the gold to the participating dealer or the distributor. So once the gold reaches the participating dealer or distributor, it means that insurance coverage will cease. Probably it could be more reassuring to leave the gold inside the vault because it's still covered by insurance and it's still securely vaulted than to have it leave the vault and be placed within the participating dealers or distributors' premises. So these are the key things to take note.
So that is actually 5 million worth of gold.
I think
4 to 5 million.
4 million,
4 to
4
5
million,
million.
about 4
Yeah.
million, so minimum 4 million. So actually what you're saying is that if I bought this ETF, I can literally use units of the ETF and say, hey, I want to redeem my physical gold, and that's possible, but minimum of 25 kilos.
Minimum 25 kilos, and also at the same time the participating dealers or the distributors, they also need to have the relevant workflows and processes to be able to facilitate this. And because it's still new and novel, a lot of the distributors, participating dealers, you need to also craft and also devise their own workflows to be able to facilitate this.
It is within your framework to allow this to happen. So
Yes.
it's like, actually, if someone actually wants their physical goals for some whatever reason, they want to display in their bungalow or something like that, they can do it. It's like, here you go. I have a
But if you want to redeem from the GLD, that gold ETF, you have to go to US, UK, or Switzerland.
Okay.
Yeah. So that's a different thing, right?
All right.
Yeah.
So I think, I think gold has a lot of use. Like I said, it's not correlated with the other asset classes. It acts like a hedge, like an insurance. And if with everything that's happening right now, like with all the conflicts, printing money, like you said, the de-dollarization that's happening in the US, and someone could be. I mean, it's hard to predict what's going to happen, right?
Yep.
But that seems to be the trajectory. Like you look at what the US is doing, it just looks really, really messy.
Yes, correct.
Before this, I never really actually considered gold, but now I actually own gold. Okay, I didn't buy your ETF. I bought another ETF because I bought it before that. But it's like, it kind of makes sense that if I want some kind of hedge against my other assets in my portfolio, I will go with gold, and like what's happening in the US and everything. But that's for me.
Yeah, correct. But I think to have a much balanced view is if you were to look back into the history of golds, right? Back in the 1980s when they peaked, right? It took about 27 years for the gold to go back to that price that you bought in 1980, right? So right now you're looking at gold because of all this tension, right? It also seems like it's peaking, but you don't know when it's going to stop, right? I think the more logical way is to really treat gold as a hedging, right? You don't invest in gold just because you want to make money on gold. You invest in gold because you want to hedge against the financial system, right? This is the first thing. Second is, if you're looking into gold right now, it's not like buying lump sum. You should do a dollar cost average to build up your position from there, right? Just in case if it goes down, you can buy your way down, right? Right. So I think that is the right strategy moving forward. Instead of like, whole lump sum, I'm just going to go into gold right now, right?
Okay. I mean, the DCA strategy works very well with ETF as well, right?
Yes.
Yeah, you can just like, whenever you want, every quarter or every month, you can actually buy some gold. So let's just say someone is interested to have a look at your ETF. And I mean, there's a lot of good points to summarize. Is voted in Singapore. Singapore's a great location. It's insured. Your fees are, I think, is at 0.39% per annum, which is actually is competitive. Is a competitive rate. How can someone actually check out your ETF?
Actually, to check out the ETF, very simple. Remember 6 letters: GLS for our Sing dollar counter, and GLU for the USD ticker. So for GLS, S stands for Singapore, GLU, U stands for the United States. And if you need a easier sounding word to remember GLU, just remember GLU. GLU, we hope you similarly remember GLU as the portfolio element that glues together your equities, your bonds, and also other allocations to be able to help you achieve greater diversification benefits.
Yeah, so if you're interested, it's basically listed on the SGX right now. And if you are interested in basically Singapore-backed gold,
fully insured
in Singapore, in an ETF like that, you can just basically search for GLS or GLU on the SGX. All right.
Yes.
All right. Is there anything else you want to tell us about your ETF particularly?
For the ETF, other than GLS and GLU, what probably investors will also notice is that our management fee and total expense ratio is capped at 0.39%. Roughly for 1,000 investment is roughly at 1 cent per day. So it's actually relatively affordable. We will be issuing the ETF units at USD $5 per unit. So basically this means that, for example, if we were to acquire and also buy the physical gold at around 5K per ounce, this means that 1,000 units will be backed by 1 ounce of gold, approximately. So from what you see, this will be the estimated backing of your investments and also ETF units based on the ounces and also the units of the physical gold available.
Yeah, so I think to put into easier perspective is basically the GLU is actually, which is under the LionGlobal, is $5 per unit.
Yeah.
Right. If you were to go to buy into the GLD, right, that will be 400 plus, which close to $500.
The one listed in the US.
Yes, correct.
Yeah.
Right. So that's the difference. Right. That means this unit is lower in price. Okay.
So it's a lot easier to, I guess, fit into your portfolio if someone just wants a smaller stake and your portfolio is not so big. It's more flexible that way as well. And I mean, I think gold has been, like you said, history for 5,000 years. And whenever there's uncertainty, kind of makes sense to have a little bit in gold. And you said you did back-tested study that having a little bit of gold actually increases your return, reduces volatility. And, if you have enough, you can actually redeem it and actually put it in your house and look at it and polish it once in a while. It's pretty to look at. It's a very pretty heavy gold bar. But yeah, it's pretty interesting, and I really like the fact that it's actually put in Singapore. But again, we wanted to balance the views. I don't think anyone should invest in gold thinking it's going to go up in price, because that's the wrong way to approach it. In that case, it's speculation. It's just you're replacing gold with something else, speculation. But like you said, if you want to, risk-adjusted returns, put a bit of insurance into your portfolio, and you want exposure to gold, and then you're thinking, okay, if I want gold and it's going to be a gold ETF because that makes sense, then which one should I go with? And this one seems to be, right close to home and everything. Basically at home. And it's not more expensive, it's actually very, very competitive as well. I would actually consider this one at this point. Anything you want to share about gold, Victor?
I think in general it just got listed today, right? I think the next question I think investor will ask is, because now if I want to buy gold using the CPFIS, it's only GLD, right? Is LionGlobal going to make this gold ETF CPF investable instruments?
We hope to be eventually make it available for CPF OA subscription. Right now, because CPF board, they have a set of guidelines. A fund needs at least a 3-year track record to be eligible for assessment for inclusion into the CPF investment scheme. So because of this, once we hit the 3-year mark, we expect to be able to apply for CPFIS inclusion. With that said, the Sing dollar ticker of our ETF, which is GLS, is available for SRS subscription. So you can still use your SRS monies to be able to subscribe for the ETF. And in fact, there's an ongoing promotion between now until 30th of April. If you use FSM1, which is $10 cashback receive for every Sing 10K invested. So do check out the FSM website for more details.
All right, so I think that's all you need to know about the ETF. You can just look for it it's listed on the SGX under GLS or GLU. All right, so if you're looking for exposure to gold, not because you think you want to speculate on gold, because you want exposure, because you want
to hedge.
In your other asset classes, I think it's a really good ETF to have a look at. And I really enjoyed our Gold Vault visit. It was eye-opening.
Yes, correct.
Never been surrounded by so much
money.
I mean, if I stand in the middle of Shenton Way, I'm surrounded by more money, because the buildings are very expensive as well. But it's literally one crate was 170 million, and holding that 2 million
and do bisect curve.
And so it was very, 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 very interesting. So thank you for
thank you for the invite.
The SGX organized that for us. But thank you for being here today. Tell us more about gold and all the benefits about this particular ETF in Singapore. So thank you so much.
Thank you.
Thank you. Thank you, Adam. Thank you, Victor.
So if you have any questions about this particular ETF, or you want to know more about gold, we can share our opinions in the comment section. Put them in the comment section. We're happy to answer them. If you like this roundtable, please hit the like button. That will help us so much. Thank you once again, Shin Xiang, for joining us. He's the head of ETFs at LionGlobal Investors. And of course, subscribe to our channel. Many more roundtables coming out, and we'll see you again.